Today we're talking about price action analysis with Mark Principato. Now Mark, that's a term, price action analysis, that we all hear pretty frequently, but it's actually kind of vague. What do you mean by that?
Well, price action analysis, yes, it could mean many things. From my experience and the type of trading that I do, it's all about very short-term tape reading, okay? I will look at prices, I will look at price and time, and I will use tools that are all price related, like candlesticks, candlestick analysis, pivot points, things along those lines where I can project prices into the future. The whole key to price action analysis is the anticipation. You do your research, you find your levels ahead of time, and when the price reaches your level, that's where you wait for this confirmation coming from the candlesticks, and this is what helps give me an advantage or an edge in my trading. I can define risk at those points, and I feel confident enough to go in and take the trade.
Now most people think about buying in those terms initially. How about selling? Would it work the same way?
Absolutely. Buying and selling to me is the same thing. What we need as a momentum trader or as a day trader, I need volatility. I need this thing to move now. My trades typically will go on for like 5 minutes, 10 minutes at a time, and that's it. If I don't get my action at that time, I did something wrong, I need to get out. That's how fast it is.
Let's talk a little bit about some of the technical indicators. You are a chartered market technician. What indicators do you like?
Well, actually, that's a good question. I get that a lot. I don't use any. When you say indicator as far as referring to oscillators, things like MACD or stochastic, my charts don't have any of those. I'm a very short-term trader, so I'm using small time frame charts. Candlesticks give me a lot of information. The other thing, like I said, the pivot points and the Fibonacci lines, things like that, they give me reference points. Other than that, I just rely on time to tell me if something's working or not.
What time frames do you trade?
5 minute, 15 minute, I'll look at 30 minute. The larger time frames I use to gain perspective. The smaller time frames I use to execute my trades and define risk.
Now for a trader just starting out, for example, any particular time frame that they should start with?
Well, a lot of this depends on the style that they plan to pursue. If you're going to be a swing trader, which a lot of people do, you want to focus on the larger time frames, like the 4-hour, 1-hour type time frames. If you're going very short term, like day trading or scalping, you can get a lot of information from your 5 and 15 minute, 30 minute charts. So it's just a matter of first defining your style and then choosing the time frames that best fit that style.
Well, great conversation today, Mark. I appreciate it. Thank you.
Thank you for having me.
This is the MoneyShow.com video network.